Good evening, everyone. So glad to have you here. My name is Sarah Scruggs. I'm the Community Engagement Specialist at the Harvard University Employees Credit Union, and we're so glad you took the time out of your evening to come and join us for this presentation about automobile buying and financing. We're going to talk about both of these things today. Hopefully, you'll learn a few things about financing as well as the car buying process. Which we think are both important aspects of getting a car. Harvard University Employees Credit Union is Harvard's not-for-profit financial institution. We exclusively serve the Harvard community, which includes all of you at Beth Israel. We are so glad to have partnered with you all for this series, and we offer everything that a bank does, but we believe we do it better. Better rates on loans, higher rates on savings, and if you have any questions about any of the products that we offer, we are happy to answer those. But today we're going to be focusing mostly on talking about buying a car. And we do want to let you know this is part of a series with Beth Israel, so we will have more presentations coming up. If you go to hbcu.org/BIDMC, you can find the rest of those coming up. I believe our next one is next month in March. And so if you would like to attend that, you'll get more information about all of that in your follow-up email as well. And if you've missed any of our previous ones that are listed on the website, the PowerPoint slides are there, and some of them also have recordings, so that if you would like to go back and listen to those, you absolutely can. So some logistics, we've gone ahead and muted everybody on the call except for myself and our other presenter, Migdalia Gomez, so that way, hopefully you can continue on doing what you need to do. Maybe you're working from home, maybe you're at the hospital, and maybe you're doing different things right now, and that's totally okay. We hope that you can listen in on some things, but that way you can hear us better, and you can go about doing the things that you need to get done. Please don't let this stop you from asking questions. We really hope that this is an interactive presentation and we can answer the questions that you're bringing with you. And so we do ask that you use the questions feature either on the right-hand side of your screen or at the top of your navigation. And if you could let me know, number one, that you can hear me. Number two, where you're joining us from today in that questions panel or chat feature on the right-hand side of your screen or at the top of your screen. That way I know, number one, you can hear me, and number two, you know how to use the questions feature. So if you could go ahead and submit where you're joining us from today, that'd be great. Awesome. I see some people are joining us from Boston, Somerville, Everett. Great. Awesome. And you can keep submitting those. Home, people are joining us from their homes today. Good, staying warm, hopefully. Wonderful. Thank you all so much for doing that. The presentation will be made available for everyone to view as well as to hear the recording. So if you missed something or if you don't want to take notes right now, that's okay. You will get this in an email, hopefully within about 24 to 48 hours from now. So that way you can go back if there's something that you're really interested in learning more about. We also will have a survey for you all. At the end of the presentation, we'll put the website where you can take the survey in the chat so that way you can tell us how we did tonight and if there's anything that we can do better so that we can continue making these presentations for BIDMC a success. Let's jump into our subject for this evening. And that is car buying. We're going to be talking about the whole process, not only just financing, but other things obviously go into this as well. Maybe this would be your first time buying a car, or maybe this is a car that maybe you have a car and you want to go ahead and sell your car and get a new one. This has information for you. So the first thing we always need to do is make a plan. Making a plan for car buying is extremely important because you can get very sidetracked when trying to buy a car, especially if you don't have a plan in mind for how much you want to spend or what kind of car you'd like. Those things can all get lost in the mix when you start looking at all the shiny, bright things on Auto Trader. I don't know if you've done that these past few weeks, but I definitely have from time to time. So, how do we start making a plan? I think it's really important to think through your needs versus your wants. And these will be different for different people. There are some people who will need a nice sound system in their car because they love listening to music on their commute, and that's what they'll need. For others, that would be a want. And that's okay. That's an important thing to recognize and realize about yourself and your family and what those needs are for you all. And so I know for myself, I cannot drive a stick shift car. So it is a need that I don't have that type of car. So when I was looking for cars, that was one thing that was at the top of my list. I also wanted to make sure these days, I mean, all cars have them, but back when I was buying my car, I wanted a car that I could connect to Bluetooth on my phone so I could listen back when I was commuting. That was important for me to be able to listen to podcasts or music. But for some people, that may not be a need. So it's good to get a list of things that are needs versus wants, and we just put a couple of suggestions here to think through, which can be seen on different models of cars. And then you get to the question of, okay, there's the option to lease a car. Yes. There's the option to buy a car. These are two very different things. There are some advantages to leasing a car. That's you can drive a new car every few years. You don't have to continually have the same car. That can be seen as a really nice thing, but I know for myself, I like to get comfortable in my car. And it's nice to know where everything is. I know how to open the trunk, when it's really cold and you've got to put your hand the exact right way to open it. And the leasing may be a lower monthly payment. That may be a good thing for you if you're really needing cash flow at this time. There could also be lower upfront costs, like I said, resulting in better cash flow at this point. But there are also some disadvantages we want to make you aware of. You don't own the vehicle, so that can be a disadvantage for some people. And if you're in a contract, it can be difficult to remove yourself out of that contract. And if you are able to, normally there are a lot of penalties, so financial penalties for terminating that contract early. So that's something to think about as well. You could have to purchase a specific car insurance plan. That's not a plan that you'd have to buy if you owned a vehicle. And there are fees that you have to pay if you exceed a certain mileage limit or if you return it in a condition that's not the best condition. But the thing that you have to think about is the advantages versus disadvantages of leasing or buying and what that looks like for your family. So just some things to think about when you're first thinking about leasing or buying. Now, when you're buying a car, you have the option of buying new or used. And there are some advantages and disadvantages to both. So we're going to think through those together. Advantages of newer cars, their reliability. A lot of times when you buy a brand new car, you don't have to worry about any of prior accidents. You don't have to worry about um, quality, safety quality, those types of things. It's very reliable. Hopefully, you're not going to be taking it into the shop every single week, like some people do if they buy a used car. Manufacturer's warranty. A lot of warranties these days, a lot of new cars do come with manufacturer's warranties and sometimes come with different perks as well. So that's something to look into if you're thinking about buying a new car. You can customize new cars exactly the way you want to, pretty much. I think these days you could probably build a car online and it'd be exactly the way you wanted. That doesn't seem like something that's in the far off future to me. What are some of the disadvantages? Higher cost. They cost more. If you buy something new, it's going to cost more. That's just how things go, right? We know that. The vehicle is going to be more expensive, yes, but insurance will also be more expensive. If you get into a wreck with a newer car, it's going to cost more for them to repair that newer car, so your insurance is going to be higher. We all know the saying, when you drive it off the lot, it immediately loses money, right? And so that's something to take into consideration. maybe you really want a new car, but you're also thinking about resale value in the future. Well, then maybe a new car might not be for you because right after you drive it off the lot, it immediately depreciates in value. So what are some advantages and disadvantages of buying a used car? Advantages, it's hopefully cheaper. Like I said, you drive it off the lot once and it depreciates in value. And so used cars are going to be a little bit cheaper. They have slower depreciation. Like I said, with new cars, drive it off the lot, 10 miles down the road, you've already lost money there. But with used cars, you can keep up a used car pretty nice and not lose as much money on that investment. So that's something to think about with a used car. There are also disadvantages. If you're buying it from, let's say, a place where they don't know the history of the car, you're going to have to do that research. You do not want to buy a car that's, has never been fixed or never had a good oil change. Those are all things that you need to think about. Normally, there's not going to be a warranty. There's sometimes a small limited warranty on used cars, but normally there's no warranty. You may be taking it to the shop more often. That may be the case. You may have to take it in to get it repaired more. And you may not be able to drive that car for as long if you were to buy a new car. If you're one of those people that likes to drive a car till it absolutely gets to its last end, um, then you would have to replace a used car much sooner than you would a new car. And how long do you expect to keep the car? That's kind of that question we're going towards. Because all of these things, we can't add an exact value number to them, but it's important to think, okay, am I buying this car just so that I can get around for the next year and a half? Or am I buying this car so that it can be in my family for, my kids so they can drive this car? That's an important thing to think about. If you decide to buy used, you need to ask for the repair history of the car. Every car should have one, and you need to run the VIN number to look up the history report of the car. That's a very important piece of the puzzle here. And something that I think when you get caught up in the buying process, we sometimes forget to do. I know for myself, when I sit in a car and I just love it, I'm like, yeah, this is great. And sometimes all of those things that I'd planned prior kind of go out the window. So definitely get the VIN number and run the history report, especially if you're doing a private sale. That's a very different thing than buying it from a large dealership or something of that nature. I definitely recommend if you're buying it from a private seller that you get the VIN number and you run that vehicle history. Take it to an independent mechanic if you're allowed to. They can tell you, how much does this need? How much work does this need? It's kind of like making sure that you get a house checked out before you buy it, right? You can take it to a mechanic and they can say, okay, you'll definitely need a new engine in 2 years. That's a big expense that maybe wouldn't be worth it if you're buying a used car versus a new car. So it's something to think about. Like I said with private sales, so if you're buying it directly from another person, you're not protected almost in any way. There's little to no consumer protection for sales. I know in my family, um, we've definitely sold cars to each other. We trust each other. We know each other. We know the history of the car. And recently, my sister and brother-in-law bought a car from their good friends that they trust and know. But there is very little protection in that. And so if something were to go wrong, there's really not a lot you can fall back on. And most private sales are as is. You're not going to get a lot of private sellers who are willing to fix up the car or, possibly get something repaired. Normally they sell it because they want it off their hands. And maybe you have a current car right now. Maybe you're looking to keep this car, maybe pass it down, or sell the car, make a little bit of money, or maybe trade it in for an upgrade. So what should you do? You need to review your options. So keeping it, Will anyone in your family need a car soon? I know in our family, we definitely had the mentality of here's the car, let's pass it down. And everybody learned to drive in the same car. And that was a really fun thing that me and my siblings look back on and have a good time talking about the adventures we took in that car. But maybe your husband or partner or parents need a car soon. So maybe it's a good opportunity for you to think about, why don't I keep this so that this expense runs a little bit lower for the other people in my family? You need to research the value of your current car. Kelley Blue Book is a great place to start with this. They can normally tell you the value of your car pretty close to what it's worth. They tell you the high end of what it's worth and the low end as well, which is nice to know. But Kelley Blue Book, or KBB, is a great place to start when you're researching the value of your current car. But you also know your car best. If it has scratches and dings and it's dirty, go ahead and get it cleaned. No one wants to buy a car that just kind of looks dingy, even if that's the way we keep our cars. I'm not saying I do, but I definitely keep it a little dirty, let's be honest. But it's important when you're selling it, you want to put its best face forward, right? Your car needs to be as worth the price tag as possible to the people that you're selling it to. And you'll usually get more money if you sell it privately than if you trade into a dealership. This is something to remember. People trade into dealerships for the convenience of it. There is a lot of convenience in trading it into the dealership because you normally, if you're buying a car from that dealership, they'll normally knock off a price on your car that you're buying if you trade in your car. But you can normally get more money if you sell it privately. And something that I want to make very clear is that right now, I was reading an article the other day actually that said car prices are at an all-time high right now. And that's because of the pandemic. It is more difficult to get parts into the United States. It's more difficult to have multiple people running the lines in manufacturing. And so prices of cars are very high right now. So you may be able to get a good amount of money if you do privately sell it to someone because demand for cars is up. So if you're selling your car, you may have the opportunity to make a little additional money. Now we're going to move into knowing your finances. We've kind of talked about the planning for what the actual car will be and how that process will go. But now we kind of need to dig into our own finances. And so we're going to start off with, so how much money do we have saved for our car? If we are at zero right now, that's totally fine, but we need to make a plan for how we can get to where we want to be. How much money are you saving monthly for the car at this point? If you haven't started, I encourage you, make a goal today of, okay, maybe I can save, $20 per week for the car, or I can save this amount of money monthly. That's an important thing to be able to say so that you're able to pay on that down payment, or you already have a bank of money saved up for those monthly payments. You need to make a realistic budget for what you want to pay monthly for the car. Once you take out a car loan, you are going to be responsible for paying on that loan monthly. You will probably have a budget for how much you can pay monthly for a car. I know for myself, I really sat down and thought about this and found that if I really stuck to my budget, I was able to pay much more monthly than I had originally thought I would be able to. So sit down with your budget, and if you don't have a budget, that's okay too. I'll show you in a couple of slides one of the resources we have on our website that you can use, but it's extremely important that you see exactly what you can spend on your car monthly. And then how much do you want to pay in total? You should have a total number in your mind, but you should also have it broken down into how much do I want to pay monthly for my loan. because it's important to know that number when you're looking for cars online or going to a dealership. If you're doing so, a lot of dealerships are doing safe in person. You can go look at a car now at dealerships safely. I'm sure they're doing a great job of that. So I would definitely recommend, if you're looking for a car, there are safe options to do that. But you need to make sure that you have that total number in your head. But you have to calculate all of the things at the top first before you get the total number in your head. Like I said, budgeting is so important when you're starting to think about, okay, I want to buy a car. How do I get from my $0 that I have saved up to where I want to be? It's important to keep that budget. And so we do have a budgeting worksheet on our website. I'm sure Migdalia is putting into the chat where you can find it on our website. You can use this, or you can use another version that works better for you. This is a free resource that we have, but there are many resources out there. Pen and paper is also great. So you have the opportunity to find what fits you best, to best budget for your car. Now we talk about down payments a little bit. How do down payments affect the overall cost of the car? And how much of a down payment do you want to save? Well, obviously, we all want to save as much of a down payment as possible that we can on a car. That's an important thing. And so we have down payments here. We have one that has no down payment. You may get offers like this. There may be, I know I've heard commercials of 0 down payment, but then this person has put $5,000 in the middle, and then we see the last person has put down $10,000. So your loan amount's going to differ from person to person. And your monthly payments, we have here 5 years at 5%, which isn't an uncommon interest rate. We'll show you what our interest rate is now a little bit later in the presentation, and hopefully that gives you a good gauge on what credit unions and banks are kind of using right now as their interest. But your monthly payment for 5 years at 5% would be each of these numbers. So this gives you a good range of, okay, what would be a reasonable monthly payment? The total interest paid over the life of the loans is below here. So you obviously pay the least in interest when you put the most down on the car. So you're saving a little bit of money by not having that down payment, or by putting on a $10,000 payment. You are saving a little bit of money in total interest paid, but it's not as large of a difference as you may think. But that monthly payment, if you're not able to pay $472 a month and you would feel more comfortable at $283, then putting down that down payment may be right for you. So this is what you really need to sit down and think about. Okay, my goal is to get to this down payment so that my monthly payment can be this amount, so that in total I pay this for the car. Having all of those things thought through before you start the process really helps to put things into perspective when you're looking, flipping through cars online or driving by dealerships and seeing the big stickers on the windows. This helps you put it into perspective of what you can afford. We have calculators on our website, huecu.org/calculators, where you can calculate the interest on an auto rate, seeing how much your monthly payment would be, and you can kind of play around with, okay, how much down payment, if I put down $8,000 versus $12,000, how much would my monthly payments be? And so you can do all of that on our website. I'm sure Migdalia has dropped the link in the chat. But this will help you to kind of find those numbers that feel right for you and your family. I'm going to pass it over to Migdalia to talk a little bit more about the financing process.
Thank you, Sarah, and thank you everyone again for joining us. So I wanted to just start off by reiterating a couple of things that Sarah mentioned and the importance of sort of the planning piece as to what kind of vehicle you're looking to buy, how much you are able to afford, and all those pieces being very important, which is why we allocated a good amount of today's presentations to talk about that before we get into the financing piece. You'll see in the next couple of slides, we'll talk about credit, we'll talk about Sarah mentioned down payment, we'll talk a little bit about some other resources, some strategies when you go into the car dealership to possibly negotiate a better price. But ultimately, having more information up front is going to put you in a better position when you're making that purchase. And even though we are talking about a car, these are tips that are applicable to whether you're financing a college education or choosing a school or purchasing a home. So a lot of these tips are tips that you can use in your day-to-day and other strategies of paying other purchases or accomplishing other goals. Now, credit score is going to be a really big piece when it comes to car buying. Many times you probably have heard or probably have seen, maybe driven by a car dealership and seen no credit, no problem, drive off the lot with a car today. And yes, that is because really what a lot of car dealerships will do is they will lend to pretty much anyone with any sort of credit. But why or how they do that is by choosing how much they're going to charge you in your interest rate. And that is a lot of times how a lot of car dealerships will make their money. It's not so much the cost of the vehicle. As Sarah mentioned, the cost of vehicles have gone up. Supply is still high in high demand because of COVID. A lot of people are now purchasing their own vehicles versus relying on public transportation or car share services like Uber or Lyft. And really, you're not going to make that much money. If the car costs $30,000, they might have a $5,000 profit. That is what it is on the car. But really where a lot of profit can be made is on the financing piece of the car. And here we have 3 different examples just to show how your credit can impact essentially how much you're going to pay for that car. And I do want to point out, some might see this and say 16%, that's really high. I have worked with members that have had higher car auto rates, and that is because they had lower credit scores and they needed a car. Cars are one of those items that it's a necessity for a lot of individuals, especially when it comes to work, maybe family obligations, taking children to school. And unfortunately, because it is more of a need for certain individuals, there are dealerships that will charge high in the double digits. We have seen this. So don't be too alarmed. That's why we are here. That's why we're going to give you some information to avoid being in those double digits. And if you ever do fall there, that doesn't mean you have to stay there. I want to reiterate that too. There are ways to get out of the double digits for auto loans. But here, let's take a car. Let's say it's going to be at $20,000. And what exactly is that going to look like? So here you'll see that because it's going to be a loan amount of $20,000, we're going to see what our monthly payment will be. The first one, if we have a lower interest rate, we're going to be paying $377 a month. At 16%, we're going to be paying about $109 more. Some of the math I will be doing in my mind, so if I make a mistake, just know that I'm trying my best to do math on the spot. But in this example, you can see that you might think, okay, it's only about $100 more. That's fine. But here is where the total interest paid, and this is where we need to compare. Because $100 more a month, you might be like, okay, that's fine, I can do that. But this is a 5-year loan. That additional $100, that's going to be almost $10,000 over 5 years. I don't know about you, but I 100%, 120, 150% can find other things to spend money on than to give it to a lender. This is where it's very important to calculate the total cost of the loan. How much is that going to cost you? What is the interest you're going to pay? In addition to that vehicle, you might think, okay, the vehicle was $20,000, but no, it's not just $20,000. The total cost is going to be that loan amount plus the interest paid. So someone that gets a 5% rate, they're going to save $7,000 more than the individual that gets that same exact car at 16%. And what we're looking at here is how car dealerships are able to make their money, because not everyone that's coming in has that top tier credit score. And every lender will be different. Some will for some, you need to maybe have, high 800s or high 750s to get the top score. For some, it's going to be, to get the the lower interest rate or to get the more favorable interest rate. Some car dealers will have a little bit different, and I'll talk a little bit more about that in the upcoming slides. But just the takeaway here is when you are shopping around for your car loan, don't just focus on the amount of the vehicle, because that, there's only so little that you can negotiate with that. The interest that you're paying, that's where the money, a lot of the time, individuals are spending most of the money is really there and not being aware of it. There are going to be situations that you may need a cosigner, and a cosigner just for a loan is just like any other cosigner. Once they are on that purchase, the responsibility falls on them as well as you, meaning it will be on both of your credit reports, meaning that if you do not make a payment and your cosigner doesn't make the payment, it will be a negative impact on both of your credit scores and both of your credit reports. So it's important, if you do need a cosigner, make sure that you are making those payments, make sure that the cosigner is aware of what that means. But we are going to show you some resources because there are many things you could do to possibly not need a cosigner. One of the resources that we're going to have for you, and Sarah will drop the URL in the chat, is annualcreditreport.com. We want you to be empowered. We don't want you to go to the car dealership or go through to a credit union or a bank for car financing and be surprised. Just like you're doing the research to know roughly what is the cost of the car, you're doing your Kelly Book research, you're doing your Carfax, you're doing all of this, do the same with your financial situation. Pull your credit report before you go to the car dealership. That way, you're not surprised. You're going to sit there waiting for them to pull it, and you're going to know, yeah, I know my credit score is X. I know what's on my credit report. And if there is something on your credit report that is either inaccurate that you're working on, that is something that you can let them know, or you can even do it before you go to the car dealership. Depending on what's on your credit report, you do have resources. And on the next slide, you'll see information about Green Path Financial Wellness. This is a not-for-profit organization that we partner with, and as partners, we essentially pay for this for those in our community. So because you've attended our presentation today, you have access to this service, even if you're not a member of the credit union. Of course, we would love for you to be a member. Those in your households are also eligible for membership, but we understand that maybe not membership, you may not need our services at the moment, but we still want to give you these resources, which is free financial counseling. So if you don't feel comfortable pulling your credit report on your own at annualcreditreport.com, which is free, does not impact your credit score. If you don't want to go through that path and you rather have someone else pull your credit report for you and have an accredited credit counselor walk you through your credit report, then you can go to Green Path Financial Wellness. They will do this. It's confidential. It's not shared with BIDMC. It doesn't go back to HR. We don't look at it at the credit union. They're not giving us your information. It's confidential, stays with Green Path. The benefit is that if you aren't quite sure, if you have something on your credit report, and let's say maybe you were past due on a bill, or maybe there's a charge that's not accurate, it's not your charge, the Green Path counselors can help you resolve that. The benefit again is doing this before you go to the car dealership is going to put you in power, because you're going to know what is on your credit report instead of being surprised. You don't want to sit there and be surprised and have the first time that someone pulls the credit report be the first time that you're seeing it. Okay. There are many different strategies, and Sarah alluded to this one earlier. One of the common ones that you'll hear, if you haven't already seen, is, okay, do I do cashback or 0% interest rate? We're going to show you an example of how this applies, and we'll break it down showing the different costs. So let's say that we have a $25,000 car that we're purchasing, and we get the option of doing $5,000 cash back or 0% interest. So that means that our remaining cost would be $20,000, or if we do 0% interest, it would be $25,000. Now, if we had a car loan, so if we did the car loan with that 5%, and then we did another car loan at the 0%, it actually would cost us, the total interest paid would be $2,645 if we actually did the cashback offer, versus if we didn't do the cashback, the total cost of the car would actually be, and you'll see that on the next item, the total cost of the car would still be $25,000. So I'll walk us through this again. I know it can be confusing and there are a lot of different steps. Ultimately, the takeaway here is if you are given the option of doing a cash back or a 0% interest rate, do the math before you accept either one. Typically, the cash back, depending on the cost and the interest rate, but typically the cash back may actually be a better offer than a 0% interest rate. And intuitively, we might think 0% interest, how is that going to be? Like, of course, I'm going to take 0% interest. But and this is just an example, but of course, always do the math. We use our own calculators on our website. There's so many calculators out there. So you can do this. You know, you can just tell them, oh, I need 5 minutes. Sit in the waiting room, do the math yourselves. But here we're seeing that by getting that cash back, it's another way, it's basically a discount of $5,000. Even though you're getting that 5% interest rate loan, you're still going to save more money. And another piece here, just because you're taking a 5% interest rate, that does not mean that you have to stick with that 5%. You do have the option of refinancing in the future. So that's something else to keep in mind. You don't have to stick to the rate that you get if you go with the car dealership. You can refinance, and typically you can refinance within 30 days or 60 days. I would always read the fine print, but typically you can refinance, and that could be a question too. Just ask, could I refinance? But typically you can refinance within a month or two. So that total interest paid could actually be lower if you were to refinance that loan to less than 5%. And then some other costs to consider. And this is, again, these are the little things that we don't plan for. We think about the cost of the vehicle, which is very important. It is the biggest cost. But then there are all these additional costs that will come up, and these are the things that add on to either essentially to your monthly expense or maybe quarter. Insurance, taxes, registration, inspection, depending on where you get the vehicle. Sometimes they'll just do registration, insurance with them, but parking, gas, oil changes. Why is this important? It goes back to what Sarah mentioned earlier about having a budget. If you run your budget and you decide that I can pay $300 a month, that $300 should include the car and everything listed here as well. So that if you are comfortable paying $300, that means that you should really try to get your monthly payment on that car maybe to be $250, maybe to be $225, so that you have enough money to still pay for everything else that's associated with that vehicle. Now, for some of you, if you've already have a car, then a lot of these costs you've probably already budgeted, you're already accustomed to. For those of you that are going from not having a car to having a car, one of the suggestions that we have is to practice these payments. Now, that may seem a little odd. How do you practice a payment? Well, let's say go back to that $300 a month. If you think that you can pay $300 a month comfortably on this vehicle, then put that money aside even before you have the car. Ideally, maybe put it aside in a savings account for that purchase of that vehicle. And if you find yourself month to month not meeting that $300 that you're putting aside for that savings of that car, that could be a good indicator that $300 a month may be too high for you. And the best part is you don't have the car right now, so you can adjust your budget before that car payment is actually due. And even though that was an example for car payment, that can be applicable to other types of debt that you may take on. I always recommend practice the payment before you have to make it. It's easier to give ourselves 2 to 3 months to change our budgets, than to have to do it from 1 month to the next. Loan terms are another big piece. A lot of times, and this is again, when you go into a car dealer, I wouldn't go in and say, you know what, I can pay $300 a month. That's what I want to do. I wouldn't go with that strategy, because if you extend the terms of a loan, or essentially how long you have to pay back that loan, you can get to a number that's comfortable. But you have to keep in mind that the more you extend, the more you're going to pay in interest. And in the past, as of, I think it was 2019, for most new cars, the average loan term was about 5, almost 6 years. And then for used cars, it was a little bit less. It was about 5.5. So most people tend to be around 5.5 to 6, but there are situations that people will extend car loans out to 7 years. Here you can see, always want to do the total interest paid. It's going to cost you more for that vehicle if you extend it. Now, if we need the cash flow, that makes sense. Another option that you have is, let's say that I know I'm going to be comfortable paying $350, but I'm a little hesitant because maybe my job might change, or maybe I'm expanding my family and I'm going to have additional costs. One strategy that you can apply is to take a longer term loan. So let's say that I want to go with a 7-year loan, but I've done my budget and I can pay $325 comfortably. I could opt to take the longer term, but actually make my monthly payment be automatic at that $350. That way I'm paying it off earlier, and should something happen and I need to reduce my expense for maybe that, my monthly payment for that month or for a couple of months, I have that flexibility built in. If you're going to go with that strategy though, I highly encourage you to set up the automatic payment and don't rely on yourself doing it every month, because the reality is if you have to pay a little bit more every month, there's more opportunity for us to then not have the money, versus if we just say, okay, I'm going to go with the 7-year, but I'm going to pay $350 and I'm just going to set it up automatically. Once you've set it up, you're less likely to go in and change it unless you absolutely need to. So this is more sort of an insurance for you if you need that additional cash flow. And other things too is, we're talking about the cash flow and we're talking about this car loan, but you want to keep in mind this is just part of your entire financial picture. So that's why sometimes the cash flow, it does impact other financial goals that you have, and the budgeting piece is really important. I talked a little bit about this earlier, or alluded to it, but I want to take a moment to talk about just shopping around for financing. What does that mean? I didn't know this until I purchased my vehicle, one of my vehicles, and it was one of those things that I just felt empowered. I was like, oh, I don't have to go with the rate that the car dealer offers me. And it's so, it's one of those mind-blowing moments. I was like, oh, good to know. So what exactly does that mean? Well, when you go to purchase a vehicle, you have a couple of options. You can take the financing directly with that car dealer if they offer it, which many of them do. And what happens with them is they'll have relationships with multiple different lenders. Most of the lenders aren't even local. Like you can have, and I don't know the exact rules on this, so maybe Texas isn't on the list, but I know it's happened to me. I've purchased a car and my bank for that car loan was actually in the Midwest. Like they were nowhere close to us. They'll essentially run your credit and they'll see which is the lowest offer that the different credit unions and banks that they work with, what is the lowest offer that you qualify for. That's one approach, and that's usually the most common. And a lot of times people will get that rate and think, okay, that's it, pay that through the life of the loan. Another option is you can go to your financial institution, your bank, your credit union, and see what the rates would be before you even go to the car dealer, so you know what your rate would be. Here we have ours, right now it's at 2.99, and you get an additional 1/4 percentage point off if it's a hybrid or electric vehicle. But essentially that means if you're a credit union member, you can get 2.99. So if you go to the car dealership and they're offering you a 4% rate, you can tell them, actually, no, I'd rather do financing with my financial institution. I always recommend wait and see. Like if you know you can get 2.99, don't tell them that up front. Just see what the options are that they have. And then if that option isn't more favorable, know that you can go with your financial institutions. There are some that will sometimes give you rates on the interest rate if you do a trade-in. You also want to find out if there are any prepayment penalties. So let's say that they're able to, if you go with financing with the car dealer, they give you a rate of a lower, a $5,000 or some discount on the vehicle if you go with financing through them. find out if that's the case, if there are going to be any prepayment or refinancing penalties. Because if I'm purchasing a car and let's say it's $20,000 and they say, you know what, if you finance with us, we're going to take $1,000 off. That might be a good deal. Like I can sign that. Yes, it might be a higher interest rate, but if there's no refinancing or prepayment penalties, I'll take that $1,000 discount in 2 to 3 months, maybe sooner. I just refinance afterwards. Because once I walk out with that car, if there's no prepayment penalty, I'm not stuck with that loan just because I took it out with that specific lender. And that is, you'll see more about that. That's essentially a strategy to work with. And the loan strategy and refinancing that you'll see on the next slide, that's essentially what we're talking about, is getting a pre-approval first so that you know what your options are before you go into that car dealer. You know, that's the same thing as pulling your credit report. You want to know, what do you qualify for? How can you save on financing before you go to actually purchase the vehicle? Know what rates you have. And if they have even if they don't have a better rate, if they're going to give you a better deal on the car just by you doing the financing with them, that's a good thing to do, as long as you can then refinance afterwards. Okay? Why not take that, $1,000 or $500, whatever discount they can give you on the car? And we know for some of you, you may not have gone through this, so we're just going to do a quick breakdown of, I know I've talked about, well, you can get the rate before. We understand it can be a little confusing, so we're just going to do a quick breakdown. So as I said before, most car dealers will offer their own financing with working with lenders across the country. And that means when you go to the car dealership, you're going to essentially work with someone who's going to be the car salesperson, and they're going to help you choose the car. Once you do that, once you do the test drives, once you do all of that process of picking the car that you want, they'll ask you about financing. And then they send you to someone else. Sometimes it's the same person, but typically they're just different people, especially if it's a bigger car dealership. It's just different departments altogether. Then you go to speak to someone who's the finance person. That happens it's still within the car dealership. And they're the ones that are going to sit you down, pull your credit reports, show you the different total cost of the loan. They're going to add the title in there. They're going to add all the different pieces. So if that car is $20,000, that's when it's going to go up to like 22, 23, all the different taxes. And that's one option. You can go complete the entire process with that car dealership right there. Another option that you can do is, before you, or even after you have the car chosen, you can submit an application. You can do this online, in which your credit union or your financial institution, they're going to work with the dealer to get the registration and title application. They'll sign the final loan documents, and then they give those funds, or they essentially send the funds over to the car dealership. So essentially what would happen in that situation is, you work with the car salesperson, you choose the car vehicle the car/vehicle that you're going to go with, let them know, oh, I have my own financing with my institution, and they'll walk you through what the next steps are. In the previous slide, we just gave the information if you wanted to get the pre-approval before. For us at the credit union, it's really simple. You just do it online, and that means that it's ready for you, but you don't have to do it beforehand. You could also do it afterwards. And then just some general final tips and information. We want you to know that you know the contract. So once you sign that contract, it is what you're responsible for. So you want to make sure that you understand it. If you're not quite sure, and this is just good with scams in general, or just fraud, anything that if anyone is pressuring you to make a decision quickly, that's usually a red flag. So if you're at the car dealership, they're like, you need to sign this right now. That's usually, I would say, walk away. Like, if you're not comfortable, walk away. If you need help, if you're not sure, even if you go with the car dealership and they're financing and you're not quite sure of the language, or if you want another set of eyes, our members contact us all the time. Like, if you're one of our members, just give us a call. Even if you're not getting the auto financing with us, we want to make sure that you're comfortable. So if you want someone from our lending department to take a look and help you understand it, if you're not sure, feel free to give us a call. We'll do that. We do that. Walk into a branch. we do help our members regardless of if you're borrowing with us. Ask questions, and if you're being sort of rushed along, that's usually not a good sign. And you do have some rights that are, they're in your favor. So a couple of the rights that you have the Truth in Lending Act, and you'll see these on the next slide. Essentially what this means, they have to tell you exactly the cost of borrowing. They have to give you that information. And that is something that if they don't provide, definitely that's something you can go to the Attorney General. Like there's certain steps that you can take afterwards, but they must provide the truth in lending, which means what is the rate, what is the total cost of the loan with that interest, how much am I going to pay, are there any prepayment penalties? All of this information that we've spoken about has to be laid out for you in an easy, and it's a standard form too, so that you can compare it. And then there are some leasing, there's a Leasing Act, and there is a lemon law in Massachusetts, so you are entitled to a new car or a refund if you buy a vehicle that doesn't work, but that it does usually apply to new cars. And so keep that in mind. It's, as Sarah mentioned, if it's a used car, a lot of these won't apply, specifically the lemon law. And also the truth in lending, if you're buying it from someone, it's going to be a different process if you're buying it from an individual versus a corporation or a smaller business. And we said this before, I've said this a couple of times, be prepared to walk away. It's okay if you're not sure, if you're not comfortable, if you've done the math and you're like, you know what, I still need more time. It's okay to walk away. We've heard of many stories of individuals walking away and then getting a call back. I remember one of our coworkers, it was $500, I think it was, just, $500 more that they wanted in a discount, and the car dealership was just, the car dealer wasn't giving it to them, and they're like, nope, that's, I budgeted for this much, and $500, they wouldn't come down. And they got a call. He left and he's like, I'm not going to do it. And they left, and they got a call within, I think it was within 24 hours, telling them, you know what, fine, we'll do it. So be prepared to walk away, but also know that that may not always happen. So you have to know that if you are prepared to walk away, that means you are prepared to move on. So if they don't come back and give you the offer that you want, you should be okay with that as well. We talked about a lot of different things. As I'm going to start finishing up and wrapping some things up, I'm going to ask you quickly to, Sarah's going to drop a survey link. So I'm going to ask for you to please take a moment to take that survey as I do a recap here. The survey information is really helpful for us. It helps us continue these presentations. Now, the big thing is just making a plan. It's important for us to know what do we want, and saying that we can pay $200 a month for a car. Okay, what exactly does that mean? Does that mean that we want to pay $200 for 4 years, for 5 years? How does that fit into our general financial picture and our financial goals? Also, knowing your credit score. We have here knowing your credit score, but I would even expand it a little bit further, just knowing your financial situation. So knowing not only your credit score, know your credit report, know what you qualify for. If you're in a high tier score and you can get a lower interest rate, know that before you going in. And if you don't qualify, I mentioned it earlier, like if you maybe have a lower credit score, that's, we don't want anyone to feel discouraged by that. GreenPath can help you bring up your credit score. And if you do need the vehicle and the rate is not what you want, that's okay. Maybe, you take the vehicle, it might be higher than what you want, but then work with GreenPath, make those payments on time on that loan, and maybe within 6 months you can refinance again, and you can refinance multiple times. So if you're at 17%, and I've helped members do this, we've seen members do this, I personally have helped, that have gone from 18% all the way down to 3%. They refinance multiple times because they kept working on their credit score. So there are things, we're not stuck on an interest rate if we work on it. There are many different things, and I want you to know that those are options, and doing your research as well. Ask around, and if you're not sure, even if you're not a member of the credit union, just give us a call as a not-for-profit. We're here to help you. We are Harvard employees, created for Harvard and all of our affiliated institutions, such as BIDMC. So, we are a benefit. We were created as a benefit for Harvard affiliates and Harvard employees. So reach out to us if you aren't sure and need some assistance.